If most of your wealth is tied up in your company's stock, then you're carrying more risk than you might realize. I've seen brilliant executives, the kind that run billion-dollar divisions, lose millions overnight because they didn't have a proper selling strategy. One market drop, one bad headline, and years of equity can vanish. And to make matters worse, blackout windows and insider trading rules can leave you locked out and unable to sell when it matters most. In this video, I'll show you how a 10b5-1 plan can let you sell RSUs automatically, legally, and tax efficiently, so you can diversify, protect your wealth, and sleep at night without sending the wrong signal to the market. And if you want even more strategies to protect and grow your equity, visit makingsenseofyourmoney.com. This is our free content hub with guides, videos, and tools for executives like you, from RSU strategies to tax-efficient retirement planning. If you're a Google VP, an Amazon director, or a leader at any public company, you probably get a large chunk of your compensation paid to you in restricted stock units. And when those RSUs vest, you're sitting on real stock, and in many cases, large amounts of concentrated company shares. And that can be a blessing, but also a major curse. I once met a public leader whose net worth was over 70% in his company's stock. He loved the company and believed in the mission, but when the stock slid 30% during a tech sell-off, he lost 7 figures in value overnight. He didn't have a 10b5-1 plan in place, so he couldn't sell during a blackout, and he had to sit and watch as he lost large portions of his hard-earned wealth. So what's a 10b5-1 plan? A 10b5-1 plan is basically your pre-approved, written game plan for selling company stock. You set it up during an open window when you have no material non-public information, and it tells your brokerage firm exactly how and when to sell in the future. And once it's locked in, the trades happen automatically, even if you're in a blackout period or know something about the company that you can't share. It's your legal affirmative defense against insider trading accusations. Here's a few examples. Sell 5,000 shares on the 15th of every month, but only if the stock price is above $120. Or sell $250,000 of shares each quarter spread over multiple trading days. This isn't random selling. It's a disciplined, rules-based system that keeps you compliant and consistent. So why does this matter? Without a 10b5-1 plan, you're at the mercy of short open trading windows, which could be just a few weeks each quarter. Miss that window because you're traveling, busy, or nervous about the market, and you could be stuck for months. I've seen executives try to time their sales and hold out for it just a little bit higher, then the market turned or earnings disappointed, and suddenly their RSUs were worth 30% less, and they couldn't do anything until the next open window. That emotional roller coaster is brutal. And if you sell too much stock at once, it can spook investors and make it seem like you've lost faith in your company. A 10b5-1 plan solves both problems. It keeps you selling on autopilot so you steadily diversify, and it smooths out sales to avoid market disruption or bad optics. Here's how we typically help a client set up a 10b5-1 plan. First, we need to clarify your goals. Do you need $1 million in liquidity over the next 12 months? Or are we trying to bring your company's stock exposure down from 60% to 30% of your net worth? Then we design the rules. How often to sell, how many shares or dollars to sell each time, any price thresholds, and how to minimize taxes by selling the right stock lots at the right time. And we use a platform that automates all of this, so trades happen without you lifting a finger. Filings get made, and proceeds are wired to your preferred account for reinvestment. For example, a client of ours from Google now sells a set number of shares each month and directs the cash straight into their diversified investment portfolio. They don't even have to think about it. They just watch their concentration risks shrink and their overall portfolio balance grow. I wish I could say everyone does this, but I've seen the opposite, and it's ugly. A senior leader at a major public company rode the stock up for years, never sold a share, and rejected every suggestion to diversify. Then the stock plummeted 45% in 6 months, and their net worth went from $8 million to $5 million, almost all from that one position. When I met this person and they told me their story, they said, if I had had a 10b5-1 plan in place, I wouldn't be starting over in my 50s. Here's a few additional things to make note of regarding 10b5-1 plans. First off, these plans aren't just for C-suite executives. Any public leader that receives restricted stock units has the ability to set up their own personalized 10b5-1 plan. Also, the SEC tightened up some rules in 2023. There is a 90 to 120-day cooling off period before trades can start. There's no overlapping plans for the same stock, and you must complete certification that you don't have non-public information when you set it up. Your plan has to meet these requirements to be valid, and if it doesn't, you lose legal protection. This is another reason to use a system that enforces compliance automatically. So here's the takeaway. If you're a public company leader with significant RSUs, decide how much liquidity and diversification you need, work with your advisor to design a rules-based selling schedule, and automate it through a compliant 10b5-1 plan so it runs on autopilot. Don't wait for the next market shock to remind you how fragile concentrated wealth can be. Make the decision once and let the system do the work. Many executives I work with also have stock options, performance shares, or complex bonus structures, which can be just as risky if left unmanaged. That's why in my next video, The Executive's Guide to Mastering Equity Compensation, I explain how to bring all those pieces together into one coordinated, tax-efficient strategy. Click here, and I'll see you there.